let's look at the performance of house prices across the provinces in South Africa. Are we seeing any laggards in the country?
Yes, on a national basis, we've seen accelerating growth for a while now, since late last year. The Western Cape leads the charge. I think it's got the combination of probably the most solid economy, the most solid long-term growth economy, and a nice land scarcity, nice from a property performance point of view.
From a supply perspective.
From a supply constraint point of view. So it's got probably the best of both worlds, and that's being seen, I think, in its price growth, 8.2% for the first quarter. So it's leading the way.
Just in terms of the Western Cape area, though, what type of prices, what type of properties rather, are showing the most growth in prices? Can you break that down into is it at the upper end, or is it just middle income consumers? I
think generally, whether it's the Western Cape or Gauteng or any of the provinces, I think the most affordable part of the market is showing the best growth. You know, the Western Cape, although it's doing the best, there is an affordability challenge in property after a few 100% price growth in the boom years. And there are still financial constraints on the household sectors in all the provinces to varying degrees. So there's an affordability drive, there's a lot of downscaling due to financial pressure. So as you go down, as a rule of thumb, going down the price ladder to the lower end, you would get the better performance with the so-called affordable housing markets, I think, across the board, performing the best.
As you say, Gauteng, I mentioned that Gauteng, for 4 consecutive months, we've seen price growth in the province. What do you see fueling this trend? Yeah,
Gauteng's taken a bit of time to build up steam in terms of price growth. Gauteng's probably also got as solid an economy in terms of long-term economic growth as the Western Cape. But it's a bit more, it's hampered a bit more, I think, by probably the mother of all building booms in the boom years. It's a landlocked province, so it's got a much greater land availability, and that's facilitated oversupply in the boom. So it's taken a bit more time than the Western Cape to build some traction, but now 6.8% year-on-year growth in the first quarter. It's starting to look quite healthy. The two that are struggling more to get going of the major provinces are KZN and the Eastern Cape. They are growing. They have had some sort of recovery since the recession years, make no mistake. But I think those economies were a lot harder hit during the recession because they're more manufacturing driven, and manufacturing generally slumps and bears the brunt of the global forces during recession times. So they seem to be the ones that lag a little bit.
Okay, so we've got the house price index sitting with year-on-year inflation of 8%. That's for March. What is the outlook? Does this change the outlook for the residential property market in South Africa? Because earlier on in the year, we were looking at a situation where we were going to have falling prices once again, albeit at a slightly slower rate.
Well, I think I don't think we should caution against expecting too much. We have had a relatively nice time in the property market in recent months, in recent quarters, and I think that, and it's pleasantly surprised me, I have to say that, but that's because the global and local economy has pleasantly surprised me and sort of come right in the summer quarters. We've had a relatively good period. I think there are still huge global economic risks. I think the US and Europe are not out of the woods yet. Very high risks of further downturns there. Much in the local residential market is going to depend on the global economy. Even if we do carry on growing positively, we don't hit another recession, I still think single-digit price growth is our future for a couple of years, probably till after the next interest rate hiking cycle, because it is a household sector that's highly indebted. It is busy rebuilding its balance sheet, and that's a slow process, I'm afraid.
But we've seen the debt to disposable income ratio really coming down, and that of course a sign of improved household basically wealth and ability to finance their debt. Are you looking at a situation where the consumer, the health of the consumer slowly continues to improve throughout the year?
I've for quite a while assumed that this decline in the debt to disposable income ratio will carry on until we get below 70%. I hope it does. I think we need to be below 70%. It's still too high for my liking. But I must say there are some concerns, and the concerns, the Reserve Bank also has those concerns in the area of non-mortgage lending growth.
So that's unsecured. You're also highlighting
not only unsecured, all other categories, the other categories lumped together, other than mortgage growth, is very strong at the moment. And should mortgage lending growth actually accelerate by a few percentage points, we could quite easily have a reversal of that debt to disposable income ratio trend upwards again. I think it's too soon for that to happen. I certainly hope that doesn't happen. It needs to get low. It's still a highly indebted household sector by South Africa's standards. Still a lot of financial pressure. 20% of households believed to be downscaling due to financial pressure in the residential market. So a lot of the financial fragility is being masked by abnormally low interest rates. And interest rates always rise at some point, we know that. So it's time now for the household sector to carry on with that deleveraging process, not to reverse the trend just yet.
Not to feel too optimistic and go out there starting to spend your hard-earned cash.
No, I do hope that it won't be the case.
Thank you very much for joining us today.